Politically speaking, a 4.1 growth rate for a quarter seems to, or certainly will be presented as representing a very positive outcome for the changes in tax policy, which goes back to the question of whether or not this is sustainable, because it's also done a cut in taxes without a huge increase in revenues will and has increased the government deficit, which needs to be covered by borrowing. So if growth at a fairly high sustained rate is not forthcoming, the deficit will continue at a high rate and the debt will continue to increase. And government needs to borrow in order to cover that debt. That can create shortages in capital markets as government borrowing crowds out private sector borrowing that might otherwise be dedicated to economic growth. There are certainly challenges. The effects of changes in trade policy, increasing protectionist policies on the part of the Trump administration could wind up having negative effects. In fact, some of what we're seeing right now, according to many analysts, is a bump in certain export earnings. Soybeans, for example, have been noted in attempts to get into markets and take advantage of the current prices before new tariffs affect them. So trade policy is certainly a factor. Government debt is a factor. As deficits increase, that could have a negative longer-term effect. And inequality, that's not just a factor in this quarter, but has been for quite a while. The fact that GDP doesn't tell you how the benefits of the strong growth are distributed, and increasing inequality can have negative effects over the long run as well. Coverage, and many economists who have been asked about this have pointed to a surge in soybean exports, especially to the Chinese market in the United States, as one factor in the 4.1 GDP growth that we've seen. And when the retaliatory tariffs that China will place on U.S. agricultural goods take effect, then we're going to see a rapid drop off, and that could turn out to be problematic.